December 2024. December was bipolar. Again, I used that word earlier talking about the market. Um, because we can go talk about the what I'm seeing on the charts first. We always do this, and I think we're gonna continue to do this more frequently and more in depth because now we are in the process of trading on a regular basis. Um, Pulling up the monthly chart. I do not like the look of this. This is just me looking at it from a perspective of technical analysis. Um, Not emotional, just based off what I'm seeing. This is the Bitcoin 1 month chart. So this big green candle right here was November. November was a great month for Bitcoin. This red, what we would call a shooting star candle, was December. Traditionally, shooting star candles indicate a top. This would be a confirmation candle. So if this candle closes at the end of January below where it opened and below the previous month's high, which was right here, then that's what we call a confirmation candle, and that is very bad, traditionally. Now, I'm not saying that this is going to happen, but when you are looking at technical analysis and when you're looking at the charts, you're speaking in different confidences. And so when we see certain patterns appear on the chart or start to form on the chart, you have different confidences that appear that you need to take into consideration. So it is not a very optimistic chart because this is what we call a bearish divergence. This here on the bottom is the RSI, Relative Strength Index. This index measures the perceived strength of the market at any given time. Now, all of this in a vacuum doesn't really mean much of anything, but again, you're speaking in confidences. So what we have here is we have a situation where from March of 2024 to December 2024, these two peaks, technically three peaks, but these two peaks, because we kind of put these together, these two peaks have a higher high on the price. So down here, this was 64,000. Up here, this was 108. 108 to 108 300. That was like the all-time high. However, in that same time, this peak, the lower peak at 64, had a higher strength index than the peak at 108. What that means is despite the price going up, the perceived strength of the market is going down. Traditionally, most of the time, this indicates a top and trend reversal could be coming. Not saying it will, traditionally. 60% confidence, 70% confidence. We're always kind of operating in theoretics, and those are always changing depending on what we're seeing. But when we look at a chart, we're looking at it at a static point in time, and you do your best to make your best predictions based off of that. And so, if this candle here, this January candle, closes essentially below 90,000, most people who trade, especially long term, like swing traders who trade for months at a time, they would see that as a potential confirmation candle, and they would probably switch their swing strategy to more of a bearish swing strategy. Not saying that that will happen, it could happen. But this is what we're seeing on the market right now, is we are seeing a situation where we could be looking at a top. Now, does that violate the 4-year cycle history of Bitcoin since it launched? Yes. We shouldn't have this cycle's top until the end of 2025, not the beginning. However, this cycle has already violated that history. For the first time in Bitcoin's history, we had an all-time high before the halving. That's never happened before. So we have to anticipate that there might be some anomalous activities on the market this cycle. So that's something I wanted to bring people's attention to. It is not a guarantee. I'm not making some prophetic suggestion that the bear market is starting now. However, if I remove my emotion from the fact that we're in a bull market and we're all having a good time and people are making money on AI coins and meme coins and all the ETFs have these really nice inflows, it doesn't mean that we should ignore the information in front of us. So that's what I'm seeing. Now, however, I can pull out a little bit, and we could have a situation where the RSI continues to drop, but the price continues to climb. So we could have a situation where, let's say this trend line remains true, and right here, because we did have a little double, like this little double peak here, is very likely we could do the same thing here. So let's say that happens. Let's say the price dips a little and then we peak in January of 2026. That puts the peak at about 120,000, and then we start a bear market. That could also happen here. Create a lower low on the RSI, and then we start a bear market. This is a potential outcome. We could spend the next year doing this little turn up into October, November, December, peak at about 120,000, and then enter into the expected bear cycle. That could happen. In fact, I would lean towards that's the most likely outcome, is that we make this little bounce up here December 2025, and then the cycle ends. However, what does that then tell us? Top of this cycle is only going to be about 120,000. There's only so much time between now and the end of the year where we could make gains on the price of Bitcoin. Also, you have to keep in mind, every cycle, the multiplying factor of Bitcoin's all-time high to all-time high is reducing, right? I wrote about that in my article. Is the last time it went from gaining 1,800% to only gaining 270%. Well, this time, there's a good chance, potentially, that Bitcoin only does a 2x from its previous all-time high, which was 69,000, gets up to 135,000. That's it. Like, I know some people are calling for 200,000, 250,000. I know my article originally said about 102,000, so we already broke that. But if it ends up being closer to 102 than 250, then I don't feel so bad with my original prediction, but there is that maturation and decay of the growth between market cycle tops that we have to consider. So that's what I'm seeing in the market. Something that we should prepare for. It doesn't hurt to temper expectations and then have your expectations be exceeded. It's way better than having these outlandish expectations and then be underwhelmed when the actual outcome is very low. Yeah, I hate Bitcoin crashes. The problem with Bitcoin crashes is the alts always get hit harder when Bitcoin drops. So, Bitcoin drops 4%, all the alts will drop like 6 to 10% because scared money flees to the safest asset within an asset class usually. And so either they'll flee to Tether or they'll flee to Bitcoin. And so alts always get hit harder. And that's something actually I want to talk to you guys about in a little bit. So that's kind of what I'm seeing in the market. That's my macro long view. Could be true, could also be completely irrelevant. But if I remove my emotion, that's what I'm seeing in the market for 2025. It's just something that you should be prepared for. It doesn't mean it's going to be true, but it just means that we are in a situation now that we are in January 2025. 2025 is marked as the end of the 4-year cycle. So whatever's going to happen with the price is going to happen this calendar year. However, we've had anomalies this cycle that didn't exist in previous cycles. Therefore, we need to consider that there could potentially be anomalies in this cycle ending at a different time, at a different price point, with different mechanics. And so you have to be open to all of those situations. However, when I'm just looking at the chart, absent of emotion, it's very likely that we top out about 125, 130 at the end of the year. And then that's it. Then we fall into a bear market. If I had to make a prediction about the bear market, I'll probably get down to 40 to 50,000 Bitcoin, the price point. And so something to keep in mind. Anyway, now that we've talked about the market, let's talk about BlockCentral. How's everybody doing? Are we following along? Oh, C-Line posted something. Oh, talking about the fires. I don't want to talk about insurance companies. They're all thieves. If you pay an insurance company, they should be by law not allowed to cancel your policy and help you if something happens and not have silly act of God clauses or exceptions. Like I think if they give you a policy by law, they need to honor the policy as long as you're paying for it. And to have all the fine print and exceptions and loopholes and the ability just to decide, last year your area wasn't risky, but now it is, so I'm going to cancel your policy before I have to be liable for anything that happens to you. I think that should be illegal. I think those insurance companies make so much money that I think we need to change that whole system. Anyway, let's focus. BlockCentral. I was talking about December because I even put this bearish divergence in the report because I felt like it was important to highlight. And again, I even said in the report, we need to prepare for all possible scenarios, including anomalous cycle activity. It's possible that that's the top. I'm not saying it is. It's possible. And we should be prepared for all potential outcomes. And that includes the DeFi Fund, which I want to talk about a little bit later. So December was kind of hit and miss. We had a new all-time high, but it also was down for the month. So Bitcoin was down 3% for the month. January starting down as well. Because of that, altcoins have reduced in value. And through that, we have gone through the process of exploring how we adjust BlockCentral to maximize its earning potential. Right now, I can tell you the client side is heating up just from the trading offering that we're offering clients. And the reason is um, this past week, technically the last 3 days, have gone incredibly well for us trading, and it's already gaining more interest from more clients. So we want to talk about that. We do have our existing client contracts. They're intact. Like I said, people are on holiday. They don't seem in a rush to get home or get back to work. It's fine. Again, we're going to worry about the things that are within our control. And right now, the client offering for trading is within our control. And we're going to make the most of that while these other things are working themselves out. Projected revenue. This is, I talked to Ian about this, and we went through, and I like this number for Q1 because of what we're actively doing now. So the trading that we're doing now, with the amount of money we expect to be trading with by February, I am okay with this revenue projections. It's a little aggressive. However, it gives us something to reach towards. And so I am in the process of working through that. I really want to get back on track with this because this directly impacts the DeFi fund. It directly impacts the token, and ultimately, it's going to impact all of you guys. So this is important to keep it on top of. Again, this helps hold me accountable because, again, at the end of the day, I have a responsibility to everybody here and everybody who's involved and engaged in the protocol. BlockCentral being a Panamanian company, we still, have regulatory frameworks that we exist within, and we want to make sure that we are, doing our utmost to be successful. At the end of the day, I have no other option. Like, I've spent well over $100,000 on the company and the project. And in the almost 2 years now, over 2 years actually, the 2 years I've been working on the project, still no salary. So, however, the trading offering that we have in place, we are able to probably start collecting a salary. Barry and the rest of the team have a small salary that's been in place this entire time. I just personally haven't taken one until now, which I'm getting to the point where I'm comfortable with the projected revenue and what we're going to do. And frankly, I have a very patient wife who's getting impatient. So need to start realizing a little bit of salary for the work that we're doing. However, at the end of the day, the protocol and the project remain my top priority. And so getting this revenue projection turned into a realization is something that 2025 is going to be very important. Total revenue generated for since the beginning, this is almost all CLPs, yield farming. So 367, which is great. Token dynamics, we've burned 8.6 million tokens. That's like 12% of the total supply. NFT contracts got 10.4 million tokens in it still. Circulating supply is below 56 million. As you know, probably 6 months ago, our big goal was to get circulating supply under 60. So the fact that it's under 56 is great. It's constant chipping away at the token supply, and the circulating supply is very important for your overall ownership. So, fund diversification. I want to talk about the ownership thing in a second, because I think that's an important thing to note, is changing the mindset, because we are a company that generates outside revenue, and we see our tokens as essentially shares of the company when it comes to long range revenue. I want to talk a little bit about token versus token value. It's important. Fund diversification, you guys see this one every time. Pretty straightforward. Treasury breakdown. Again, most of it's allocated to client services, as we have spoken about time and time again. DeFi fund investments, the farm, the LP. Obviously, all of this is highly important, and there's, I think Ian put over here, 0.04% of the operational, or of the whole balance of the whole company is the operational balance, which means everything that we have is currently engaged in the organization. Nothing's sitting static or being held back. We are, all our eggs are in one basket, which is the BlockCentral basket. Crypto's booming in China. Well, then China needs to have all 2 billion, 1.5 billion people buy one Bitcoin, right? That math's out, right? I think so. DeFi Fund monthly performance, it didn't really perform much because it was out of range. Again, these positions are boring, and until we get a new alt season, ultimately kind of in hibernation. And so I wanted to, what do we got here? Oh, Bitcoin's coming back down. Sorry, I get distracted easy. I saw the price in the corner of my screen. I'll talk about it in a minute. Let me get through the numbers first, and then we'll talk about it. Operating balance. So the whole of the project was down about 17,000. The month of December, again, the month of December, we saw a new all-time high in Bitcoin, but the month of December also was down. It was down 3% for the month. So ETH was down, all the alts were down. So the overall value of the DeFi fund was down 18,000. Important metrics. We always look at the 8 and 9 backing LP to market cap ratio, 16%, circulating supply to market cap ratio, 39%. Again, very healthy. We're always really close to that 20-40 split when it comes to that stuff. And then our staking and farm APYs, spot on the same as last month, 16%. Actually, the farm API went up 44% versus last month's 42%. So if you've been in this farm, I know there's 2 people I noticed in the farm. They have their dynamic strategy set to 100% take profit. So every time the rewards trigger, they take profit. I think one's like $11, the other one's like around $15. And so over a year, those 2 people will realize 44%, 42%, 40%, whatever it ends up being, 40% profit on their farm doing nothing. They just left it alone. So if they have a $10,000 farm, when they come back to their farm in a year, going to have $4,000 in wrapped Ethereum sitting there waiting for them. I think that's pretty cool. Tokens burned. We burned 760,000 tokens. And we did almost $12,000 in buybacks last month for a total of 1.1 million tokens. Almost all of those tokens went to rewards, and which means 45% of those tokens were burned on top of all the other taxes and stuff that we had accumulated throughout the month. And that's it. Those are quick numbers, quick report. So let's talk about the project. I think over the last 18 months, we have done a really good job of being self-critical. But I don't think we did a good job of being self-critical quick enough with the DeFi fund and its current structure. And what I mean by that is over the last year, I personally have grown skeptical about the crypto market when it comes to altcoins. Not crypto in general. I think crypto as an asset class and as a means of revolutionizing the financial industry, and blockchain being the third great evolution of accounting. And so if you know what I'm talking about there, it's very important that blockchain as a technology continues to get implemented throughout our lives, whether it's logistics, voting, finances, whatever it might be. And so, but when it comes to crypto, we've hit a very polarized, bipolar existence within the space. And right now we see this like dichotomy exist. There's two camps. There's institutions, and 95% of the money institutions are playing with is in Bitcoin or ETFs. And then there's retail, and 95% of retail is gambling on altcoins, meme coins, Pump.Fund, Solana. Now they're off to AI agents, and the narrative changes, the speculation doesn't. And so you have institutions and 95% of their money dealing with Bitcoin and ETFs. And then you have retail where 95% of retail is speculation. And it's speculation on steroids. And unfortunately, a lot of the utility middle ground altcoins are not filling up any space in the crypto mind, the thought bubble that is cryptocurrency. A lot of the coins that we're holding are utility coins, Arbitrum, layer 2, Optimism, layer 2, Pendle, Yield, and etc. Lido, which is basically leveraged wrapped Ethereum, So we're in a situation where the DeFi fund, as it was conceptualized, oh, that's the wrong one. I lost where'd I go? There we go. So the DeFi fund, when it was conceptualized, was based off the assumption that the fart coins, yes, Kyle, fart coins, was based off the assumption that these utility tokens would grow in utility, which means they would grow in value. That hasn't been the case. And through the last year, me personally, and I speak pretty confidently on behalf of the rest of the team, that it's really hard to exist in the middle and be profitable long term. So every altcoin will probably have a moment, an opportunity where funds capital will cycle from Bitcoin, Ethereum into alts. But even long term, you don't see that lasting. And on top of that, almost all of these alts and almost all alts in general, they're not like BlockCentral where it's deflationary. A lot of them are inflationary. And either they're inflationary because they actually have a mint function built into their token, like um, Ethereum before or Doge before, where you can mine it, like technically like Bitcoin, but Bitcoin's inflation is so low. And or it's simply unlocking schedules for the holders, long-term holders, VCs, the team, staking platforms, whatever it might be. And so you have more supply hit the market, be contributed to its market cap calculation. So a lot of coins, if you go back and you look at what their market cap was during the last cycle versus now, despite the fact that their price is way lower than it was then, you see like, oh, the market cap ended up significantly higher, but the token price is lower. How is that possible? Well, it's because more tokens are in circulation now that are being counted towards the market cap that weren't before. And so essentially it's been devaluing the token, even though the token might be being used more, might be being utilized more. So I go through all of that to talk about we are in the process of exploring potentially either adjusting the DeFi fund or reallocating those funds to other parts of the protocol. For example, the trading. So let's talk about the trading. We have 30,000 in client funds in the exchange account that are being traded as of right now. We have another 15,000 coming within the next week. We have a client meeting next week. That would be another 50,000. And then each of those clients, after a month or two of returns, will look to increase that, increase their commitments. So far, we had 15,000 in the month of December. That particular client was incredibly happy. They deposited another 15,000 and then another 15,000. So the funds are coming, and they're gonna, in my opinion, they're gonna start coming quickly. The reason for that is the trading is going very well, and I'm gonna pull up. I took screenshots because I didn't want to have to deal with being logged into the trading account. Let me see here. So these are trades just from the last day. Not last day, last 3 days, sorry. Trades performed by me in the last 3 days on the exchange account on the 30,000 in client funds that we have. $1,000 P&L, 585, 531, 529, 176, 133. There's a bunch of little ones down here. 53, 27, 25. And my only loss in the last 3 days was because Polygon continues to suck. And even when I longed 2 other assets that ended up in significant profit, the same position at the same time, Polygon did that. And now I'll probably never do anything else with Polygon except short it. And so anyway, these are trades just from the last 3 days with a relatively small bankroll. I don't consider them risky trades. I spend a lot of time watching the chart, timing my entries, layering my DCAs, and then resulted in great returns. this is what I'm good at. And so we already have clients who are seeing these returns ready to commit more funds. More funds will equal more revenue for the protocol. More revenue for the protocol equals better returns on the token. So I wouldn't, I spent, so in reference to what Green Nixon is saying, I've spent 8 years trading crypto, 10 years in crypto. And I should have never stopped trading. I stopped the last 2 years to focus on building BlockCentral. Not only was it incredibly stressful, there's a lot of other stuff going on. There's people that were, for lack of a better word, committing some pretty significant abuse that I had to deal with. And now we're at the point where, with the situation with the clients, the situation with the fund, and the market overall, and also the ability to cut some things down so I can focus on this, gives us the opportunity to offer a client service that involves monthly returns. Luckily, clients don't expect a significant amount of returns per month because they are TradFi clients. In return, we get to keep a lion's share of the returns on those funds. So, all of that to be said, we are going to be able, in my opinion, very quickly, we are going to be able to surpass what we make per month on the trading alone that we ever made on the CLPs during our best months doing that. With that being said, if we were to take the DeFi funds as they exist and put them into the trading, you could see a potential for them to grow relatively quickly. However, what's the downside? Downside is it's off chain. That's all trust and essentially no ability to monitor. I'm not 100% comfortable with that because our entire model is based off of things being on chain. However, for the last 9 months, a significant number of funds have gone off chain to build out client services. So that's been a trust based situation anyway. So it is something to consider. On top of that, do I think that there is another alt season coming? Yes. Do I think we could potentially see the current DeFi fund as it sits double or triple or quadruple in the next coming months? And that alone would outpace any potential trading earnings in the same period of time? It's possible. So this is something that we could consider in a couple months, but it's just a matter of, I'm kind of putting the idea out there that we are getting to the point where we need to potentially evolve our base strategy for the protocol so we can continue to support the token. Now, talking about the token, I mentioned this in the guild chat last week. So if you're not in the guild chat, you can hear it here, or if you are in the guild chat, you can go read it. In my opinion, when it comes to how the company is run and how revenue is generated, I would implore people to be far more interested in what their ownership percentage of the token is versus the current price of the token. Now, the token's at like 0.8 cents. Yes, it's down about 20% from where we initially launched. And a lot of that has to do with the market and some people, deciding to move on from the token. However, as a revenue generating company, as we continue to burn tokens, if you don't sell them, your ownership percentage goes up, right? So let's say, for example, you own 5% of token supply, and someone goes and sells their 2% share of the token supply. Well, that 2% gets redistributed to the remaining token holders. And so now your 5% tokens supply ownership, your 5% ownership turns into 5.1% ownership or 5.2% ownership. That's important because the trading is not the only revenue we're going to be bringing into the company. We are going to, and I posed this theoretical in the guild chat. For example, not that the concept of a buyout has been broached, but just giving an example. Our market cap's around 600,000 right now. That's for the token. Not talking about the company, just the token. 600,000 is like the market cap for the token. I gave the example in the guild chat. If we were approached with a buyout of the company or a takeover or an absorption, whatever it might be, and it was $5 million. Well, we would allocate 4 million or 3 million, somewhere in that range, to the protocol. Protocol as in the token. Not to buy that much. There's literally not enough supply on the market to buy that much, but we would allocate that to the protocol as a buyout, as a because we're being bought, like the example is being buyout of the company, so we would shut down the token and distribute that $4 million, for example, to the token holders proportionate to what they own. Now, you might own 5% of the token supply with a $600,000 market cap, which is a grand total of $30,000. However, 5% of $4 million is $800,000. Wait, nope, did the math wrong. Is 80, yeah, 5% of $4 million is $80,000. So what would you rather have? Would you rather have $30,000 of token at its market cap, or would you rather have 5% of your ownership of the buyout? 30,000 versus 80,000. So that's what I was mentioning in the guild chat, just to keep people in the right frame of mind. Because of the way the company's geared and the way the company is structured, if people need to extract capital from their investment, the token is liquid for them to do it in real time. However, the token exists as the medium of exchange between the holders and the organization. And so ownership percentage is important long term. Token price is important in the moment of need. If you need the money, you can extract it from the token. However, long range, ownership percentage is more important than token value because of how we plan on over time distributing revenue to the holder. So that's what I wanted to get across to people is it's not your traditional crypto investment. What it says on the chart isn't necessarily the value in which you assign to your holdings. Just because your tokens are worth $10,000 now does not mean in the coming months and years that that's what the true value of them will be, if that makes sense. So just worth framing it that way for you to think about outside of just the confines of just here's the token price, here's how many tokens I have, this is how much my investment's worth. It's not as simple as that, and it's worth people knowing like there's more to it than simply viewing it that way. So that's it. That's my full update. Trading is going very well. Clients are very happy. That hopefully means that we're going to be bringing in more capital to trade, which means we're going to have more revenue for the DeFi fund and for the organization in the coming months. I am pushing very hard to get the trading fund into the six figures. So revenue coming back to the organization is well above 10,000, 20,000, roughly into the 30,000 range in the short term. And as soon as we can do that, we can start making a dent in the DeFi fund. We can start making a dent in the value of the token, in the supply of the token, and getting ourselves back on a trajectory in which I am comfortable seeing the organization move towards. Yeah, it is a measure of sentiment. I agree. However, I'm not immune to understanding that we have taken far too long to get to this point. You know, it's really a testament to you guys and the community's overall patience that we've been allowed this time. However, I don't want appreciation to morph into taking advantage of the patience. Me personally, I have no more patience because I haven't been getting paid. So my patience is bankrupt. I might not be, but my patience is. And so we're in the position now where where we have actionable tasks in front of us that we can control. And so that's where I'm focused at the moment. Is this first client side business still in the books? Yes, there is. Yeah. So all the money that is allocated to the client side is still accounted for. Yes. A lot of it is to put it frank, we had to set up a lot of different accounts and infrastructure, which sadly, a lot of those just require a certain amount of money to sit in the account minimum. So, for example, one of our private investment funds um, in Panama requires 5 figures to be in the account at all times, minimum. And so it just sits there. It really doesn't earn us anything. I wish we could take it out if we're not actively using the fund at the time. But if we did, they would close the account. It's stupid. I don't understand exactly. I think it's just a measure of like assurance that the account will remain active. Personally, I think the bank's just using the money to go make their own money, which isn't outside of the realm of possibility. But yeah, all of that capital will be in my purview will be returned to the DeFi fund and then reduced on the balance sheet. So, for example, I think it's like 250,000 is client side right now. My first goal would be to bring those funds back to the DeFi fund and reduce that line item on the balance sheet until it's gone. If we can earn back and replace that money, so the money that is in Panama in those accounts is just operational balance and allocated internally on that side, then we don't need to continue to track it on the DeFi fund side. And so at some point we do shut the company down, we could then account for that money as I don't know. I can't think of the word. Anyway, so yeah, that's the plan. Is when revenue comes in, it will be replenishing those numbers on the DeFi fund side. But that's the update. That's what's going on. That's what my focus is. Um, as soon as I'm done here, I'm going right back to trading. So I traded today. Two of those trades that you saw today, which is about $1,000 in returns, I did this morning. And I think, if I remember correctly, I'm currently in a trade. I'm not going to tell you how much or what it is. I can tell you it's in profit right now because I know what my entry point was for that trade. Um, in my mind, this is how I framed it. This is how I framed it to Barry and the rest of the team. This is what I'm doing full time now. So almost all of my time is dedicated to trading at the moment, um, which is good because, again, I personally think I have a proficiency for it, and the more time I do it, the more proficient I'll be at it. And so, once the clients continue to increase their commitments to the trading, we will see that revenue start to grow, and I hope quickly. But that's where we're at. That's what we're doing. Um, other than that, I said that other than that again, and I saw someone comment on that. It's going to be a drinking game. I know it. I know it's going to be a drinking game. Um, let's do a couple giveaways and get out of here. I appreciate you guys taking the time to listen to me ramble about what's going on. Me personally, very excited about the near future and 2025 for what we're doing. Change is inevitable. Let's just make sure that change benefits BlockCentral and the protocol and all of us equally. And we're gonna get to where we need to be. Again, I'm frustrated about how long it's taken. However, I think we are now in a position that we can take advantage of all of the prep work we've done up until now. Yeah, very exciting time. Exciting for me because I feel like I'm back in complete control of the outcomes. I felt that way when we were running pure CLPs and there wasn't really much else going on, and we were and I haven't felt this way since then. And now that I feel this way again, I want to make sure that it continues. And I think it will because trading is something that it's an all-encompassing circumstance. And and so far we've been able to do it quite successfully. All right, do a couple giveaways. $10 in block. We're gonna go with Angaro. We're gonna go with Finesse, and we're gonna go with Sulazaki, and we're gonna go with Wax Nation. There we go. I don't remember who I said now. Angaro, Sulazaki, Wax Nation, and Finesse. There we go. All right. $10 in block. Open a ticket. That's all I have. Unless there's any last minute questions, if anybody wants to follow up, please follow up in the guild chat. If you have any questions about the trading results, I'm an open book. Follow up in the guild chat. The guild chat is where I will be giving probably weekly updates about the trading. There'll be far more transparency there than in the open community. I want to make sure that we start to utilize the guild chat as access information. But again, if you have any questions, we have, because our company is based in Panama, we have access to Binance, we have access to Bybit, and we are in the process of setting up a account on Bitfinex. That's the nice thing about having our entire organization based in Panama from the very beginning. I'm not going to say it. That's all she wrote. Other than that, that's all she wrote. Everybody have a great weekend. Thank you so much for coming. Happy New Year. Happy 2025. And I look forward to the next update. I feel like it's going to go much more bullish. Cheers.